We go. Hi everybody, how you doing? Welcome back. It's your buddy Uncle Bruce here on Stock Markets with Bruce, where we are attempting to follow the markets as they're going to open in an hour from now. Welcome to the day. It's Monday, September 26th, 2022, and it's nice to have you here. As usual, there is a ton of stuff going on out there. But as usual, as of lately, it seems that what is going on out there couldn't be more perfect than what you need to be an option writer. For option writers, we have got the right situation happening at this time. If you're an option writer, you're looking for a stock to go up, down, or don't do anything. Of course, doesn't matter which way the stock goes. If you're an option writer, you're going to make money one way or the other. But look, if a stock like Apple or Tesla, or stocks like Hewlett Packard, HPQ, GameStop, Cisco, Pfizer, if these stocks that you're writing options on are going to just hang around a while after being beat up a little bit, you're going, oh, okay, fine. I'll write calls just ahead of you, dollar or two or whatever, and I'll take the premiums for the next, say, 2-3 weeks or so. I'll write contracts for premiums. Time is money, and I'll take money for time. Hey, you want to have a little dip later today or tomorrow because you don't feel well or you're worried about whatever's going on? That's okay. You can go down a little bit. I'll just buy back the call that I wrote here at half the price or a third of the price that I just issued it, and I'll write another call a dollar or two ahead of that. I mean, it's fine. On the other hand, if you don't dip, you just kind of hang around here, and you barely fluctuate for a few days because you got to catch your breath and try to figure out where you're at in the world. That's okay. What I'll do is I'll just enjoy the shrinkage of this contract as it's running out of time to live. And since it's an out of the money call, all the value of this contract is air anyway. It's only time, and I'll let a third of the time go by over the next 2 or 3 days, and watch the contract drop. I'm going to make money either way. Okay, you want to just stay flat, I'm going to win. You want to go down, I'm really going to win faster. You want to go up a little bit, that's okay too, because I've written an out of the money call. So if I'm a dollar or two ahead of the market and the stock goes up a dollar this week, but a week goes by for that to ultimately happen, I'm still winning. I'm still sitting on an out of the money contract that has 1 week less left to live. This is shrinking out. I'm going to cash in and enjoy the gains. There are times where I get richer because my stock went up. There are times I get richer because my stock went up and I rolled my contract into a future contract down the road a little longer in time for the same premium or a higher premium. I'm going to win. There are times that the stock doesn't do anything and the contract just whittles and whittles out and whittles out and whittles out, whittles out, and I buy it back for 20 to 30 to 40 cents on the dollar, and I write another one. And then there are the dip days. So there's stocks that dip and dip and dip, and I just buy back, write again, buy back, write again. We're very accommodating people here. We are liquidity providers. Actually, funny enough, we're in a roundabout way liquidity providers because we provide liquidity by creating more contracts for people to play with and gamble with. We're just a wonderful group, and we keep the change. That's how we play around here. If you have never been here before, or you've had a friend of yours tell you, hey, you should watch this Uncle Bruce guy. He's got this incredible channel. You're already disappointed because what's to look at? There's a suitcase here. The guy's in a hotel room, so obviously he's not like in a house. He's not in a mansion somewhere, so he doesn't look all that successful. He's wearing a T-shirt that says, Stock Markets with Uncle Bruce. What's to look at? There are no charts. There's no market data. There's no ticker. I mean, what? All he talks about is world events happening to the markets and how that's upsetting markets. And then he talks about writing options, and all he talks about is making money all the time. That's all he talks. He just helps people talk about ways to make money in the markets. What a boring guy this is. Welcome to the party, pal. This is the how to make money in the market channel. How to make money in a bear market channel. We love writing options around here. I don't write any options, by the way, in case anyone's curious. If you're, like I said, if you're new and you don't know who this is and what I don't buy and sell stock, and I don't buy and sell options. I'm just a guy who just turned 67 last week, who has this stunning forehead that's losing all its hair. I'm a former stockbroker. I used to be a stockbroker, and at one time I was a desk trader. I was also a stockbroker, a VP, branch manager of a national brokerage firm. I once had a public company that I took public and was president of with a buddy of mine. I've been in the Cayman Islands as an offshore asset manager there, so I've seen the offshore side, got experience from that. I've done corporate finance work over the years. I've done it all. I've done a lot of stuff. But 5 years ago, I was sort of looking to kind of go into retirement, and I decided to become a YouTuber and just start talking about traveling. I thought, well, I'll talk about traveling now. I'm an old man, 62. I'll talk about travel. So I created a channel, Traveling with Bruce. That was my first channel. It's still out there if you want to watch it. I'll be on that channel tonight, as a matter of fact. But 2 and a bit years ago, I created this channel, Stock Markets with Bruce. How the stock market works in plain English. That was the whole shtick. That was the whole thing. Because there are so many channels out there you can watch on YouTube. And there were many more a year and a half ago. There were many, many, many more a year and a half ago. There aren't as many now, because a lot of these guys have gone. But I decided I'd create a channel just how the stock market works in plain English rather than with fancy words. And I started the channel in like June of 2020. And by late July, I mentioned GameStop. How many shares were shorted on GameStop back in the summer of 2020. And I did a video on it. I wasn't live those days. And then I did another video, I think later in the year, and I did some in December. And then come January 2021, that is when GameStop went, whoa, crazy. All the meme stocks and all kinds of people were buying and selling stocks using these for the first time. And it went nuts. And I decided I'm going to go live now to try to answer people's questions live and help them understand what the heck is going on. And that's what I did. Oh, by the way, Willie, thank you for being a new member of this channel. I'm just so glad you joined us. Welcome to the party, pal. Glad to have you. If you're returning as a member, welcome. I notice you've signed up as a Gold Bagel member, and I love you for that. We have 2 levels of membership here: the Chillin' with Uncle Bruce member and the Gold Bagel level, and that's right there. That's the top of the food chain around here. Thank you, Willie, for being here. Love having you, and thanks. I'm happy to be here. Fabulous. This is good stuff. Nazareth, I did make 70 grand on Friday. Giddy up. Nice going. Good morning, everybody. In any event, I started going live back in January of 2021, and it was just fortuitous timing. It was also a need where people were desperate for help, and the television networks were no help for new investors, because many new investors were being labeled idiots by the so-called network television business channels. They were calling anyone who was buying stock through platform trading, calling you dumb money, new money. People don't know what they're doing money. You were supposedly sports gamblers now trying to buy and sell stock. And maybe there was some of that, but there were a lot of people out there going, hey man, I've been working my whole life, my adult life here in a job. I've had 2 jobs, 3 jobs. I've shifted companies. I'm trying to get ahead in the world here. My employer, my boss is a moron. I'm always in meetings. I don't seem to get ahead. Other people get lifted higher around me, and I'm not getting part of the action. What's the problem? I'm trying to make some money on the side, or I'm stuck at home because of COVID, and I'd like to really, change my world and my life, and I'd like to see my kids again, and on and on and on and on it went. And you know. What can I say? Oh gosh, we got a moron here. Jesus, look at this. All right. Anyway, we do the best we can with what we've got, and people are saying, I just want to get ahead with this world. Can you help me? And can you explain to me what the hell is going on? And that's how this channel really thrived. I talked about GameStop. I talked about AMC. I talked about just all kinds of other stuff. And I now am talking to you folks, and started talking to you folks back in April, May of a year ago. Options, how to write options on stock you already have, because so many of you out there have got positions that are just sitting there and doing nothing. And you're finding out for the first time, oh my God, I can write options on my stock and bring in some income, enhance my revenues. And I've been able to work with you folks now for over a year. I brought out classes on my website, and a whole bunch of you have figured out just how this can really change your economic life. Hang on one second. I've got to go over here to my settings for a second, because we are being harassed here. As usual, when folks around here do well, others get jealous and start to harass some people. So we're just going to nip this in the bud. We're going members only on chat. One of the benefits of being on this channel as a member is that members get the chat and non-members are welcome. But if they're abusing the system, they have to be, kept out. So if you'd like to join the chat here, love to have you become a member of this channel, like right here. ERYC, you became a YouTube member. Welcome to the party. Gold Bagel member, nice to have you. Nice you could make it. A number of folks here have been referred by other people to come around here because of the option writing success that a number of folks have had here. You do not become a millionaire writing one option contract. That it doesn't happen that way. What happens is you start getting victories in your pocketbook every time you get into an option scenario. If you write options in the correct way, you learn how they work, you understand how options depreciate, you begin to take advantage of contracts that in their last few weeks of life lose a lot of their value. And what you're doing is the hardest thing to do in the market. First, I am training people here to do the most difficult thing there is to do in the stock market. And what is that? The number one most difficult thing, sell first. The first transaction I make you do is you have to sell a position first. Not buy something, sell something. You got to write a call. You have to sell a call contract that you're writing. You're now short a call. You have written a covered call, and you're going to have to buy it back eventually, or let it die worthless, because they can do that. And what you pay for it should be a lower price than what you sold it for, and the rest is yours. You keep the change. We play this game called Keep the Change around here. We do this all the time. Thank you all for being here and popping in. Appreciate it. And 83 thumbs ups, guys. Thank you very much. Anyway, thank you, Erie. Thank you for joining. Option writers write calls up here and they buy them here. And the most difficult transaction in the stock market to do is to sell something. All of you out there have had a situation, or you know of someone who bought a stock and the stock did really well. It went nicely higher. They never sold it because why? Well, it was going to go higher. I've already doubled my money, but it's going to go higher. I hear that the company's doing this and the company's doing that, so the stock is going to go higher. How many times have I been told by viewers that I owned GameStop at $70 a share and it went to 300? And did you sell it? Well, no, it was supposed to go to 1,000, you see, so I didn't sell it at 300. So what happened then? Well, it went to 200. Did you sell it at 2? No, it's going to go back up to 300 and then go to 1,000. So I didn't. Then what happened? Well, it went to $150. Did you sell it? You bought it at 50. Did you sell it at 150? No, I held it because it was going to go back to 250. Then it was going to go back to 300, 350. Then it's going to go to 1,000. They never sell. And you look to Wall Street for recommendations on what to do with stock. And what does Wall Street tell you? Keep buying and keep buying and keep buying, average down, reallocate your portfolio, but you never sell anything. They never say, this stock's a dog, get out. This is a pile of garbage, get out. Or, we've been telling you to buy Apple shares for the last 20 years, and Apple just hit $180, the highest trade it's ever had. We think you should sell now. No one tells you to sell Apple at the all-time high. Never. They don't tell you to not sell. They don't tell you to keep buying, but they just kind of keep quiet now. They go, it's at 180. It's performing very well. Yeah, you bought the stock at 70 3 years ago. It's 180. Do I sell it now? Oh, no, it's part of a solid portfolio of investment funds. What? It's because every one of Wall Street's biggest clients owns this stuff. And Wall Street earns a ton of money trading Apple stock and helping Apple raise money on bond issues and everything else. They're never going to tell you to sell it, ever. So people never sell. However, they watch this channel and I talk about Apple stock and they go, well, it's trading at 149, 150 a share. And he's saying you can buy 100 shares for 15 grand and you could turn right around and issue a contract, sell a contract like a month out. A 155 contract, that's like $5 out of the money, offering the stock you just bought for 150 for 155. So you're offering you're saying to somebody, you can have my stock for $155 a share, even though it's trading at 150 right now. I'll give you a month to think about it. All you got to do is buy my option from me and I'll give you this option. What's the option cost? How about $5.25 a share for 100 shares? In other words, give me $525 right now, and I'll give you an option to buy my stock from me for $5 a share more than it's trading at. And people do that. There are gamblers out there who don't have 15 grand to buy 100 shares, but they've got $525 lying around, and they're thinking, hey, I'll buy a contract for $525, and I have an option to buy Apple for $155 for a month. And if in the next 2 weeks the shares go to $160, my contract at a 155 contract, the stock's at 160. I have a $5 valued contract plus time. It might be trading at $7, $8. If the stock was to 165, the contract is worth $10, $11, $12 on the open market. I only paid $500 for it. I can sell it for $1,200. That's what gamblers do on the casino floor. They buy contracts because they can't buy the stock. They haven't got the money. So they gamble on the upside of the stock, and if they're right, and the shares do appreciate in that time frame that you've given them, they could make money. Of course, if Apple shares stay between 150 and 155 for the next 3 weeks, even with a week to go, the stock is still between 150 and 55. The value of that 525 contract is dropping. Because if it doesn't go over, the stock doesn't go over 155, this contract is whittling out in value because it's running out of time to exist. It used to have 30 days. Now it's only got 10 days left to live. The stock is still not over 155. This 525 contract is down to $2, 150. And that's where you come in and go, I sold one of these contracts 3 weeks ago for 525. They're trading right now at 130, 150. You know what I think I'm going to do? I know it's got a week to go, but I'm going to buy it back today. Even with a week to 10 days left to go, I'm going to buy it back today. And I'm going to secure that $3.50 profit, $3.75. That's $375 profit on one contract. I'll keep that change. And I now don't have a contract against my stock because I bought a call back on the call market because there's tons of them trading all the time. Whatever happened to that guy that gave me 525? Probably losing a bunch of money, but that's not my problem. I gave him an option. He bought it. Gave him an opportunity to buy my contract. He bought it, and he can sell it to anybody else if he wants to get out. But I bought one call contract back and negate this one, and I'm flat. Guess what I'm going to do now? I'm going to write another contract. Stock sitting at 152. I think I'm going to offer my stock for 157.50, about $5 ahead of where it's trading at for a month from now. And I'm going to bring in $525 all over again. And that's what's happening here again and again and again. Investors here are becoming to follow this channel and are beginning to say, I want to write these options. I like this idea. I'm going to write options out of the money ahead of the stock with very little time left. And I'm going to buy that call back when it depreciates as it runs out of time, because this market is a bear market and we don't have stocks going to double next week. We don't have economic news coming out of the USA, Europe, China. There's no good news coming. We have a war in Ukraine. We have Italy just electing a far right prime minister that has communist type diet. We've got the UK imploding right now. We've got midterm elections coming up in the United States, and it's total uncertainty. Stocks aren't going anywhere. We're going to be kind of so for a while. I think I want to learn how to write calls. Why don't I watch Bruce's channel, where all they do is talk about how to write calls all the time, and these folks over here, these members of the channel, compare notes on the calls they're writing and how they're doing it. I'll become part of that family, and let me take in $200 on this contract, $400 on that contract, $300 on that contract, $100 on this contract. I've got shares. I have 100 Apple. I have 100 Microsoft. I have 200 GameStop. I can write calls on all these shares. Some of my viewers, of course, are a little more aggressive than that, and they say, well, I'd like to bring income in, and I love it because I want to quit my day job. I want to get away from the damn boss. Can you help me? Well, yeah, you can watch my lessons on my website. Apparently, Nazareth has done just that. Thanks again for all your lessons. Uncle Bruce scored Big Friday. Get an everything bagel on me. Thank you, my friend, for this very generous donation. I do appreciate it. Very nice of you. You know, people want to quit their day jobs and want to be self-employed. Now, others will say, you know what they really want? They want to be retired. They don't want to work anymore. They just want to be retired. You can call it whatever you want. If you're 65 and you're writing contracts and living off the money from contracts and Social Security, you're retired. If you're 45 and you're living off of premium revenue from contracts, you have two houses, you live in one and you rent the other, you're not necessarily retired. You might be semi-retired, but you're actually a property manager and you're an account manager. You're a wealth manager. You're working for yourself. You're self-employed, right? But some people say you're kind of retired, you know. You're not working for anybody. You're working for yourself out of your house. You collect the rent once a month and make sure the house you're renting is okay. And then you're making this money with Uncle Bruce during the day. You're trading these contracts, and you write them and you buy them back, and you write them and you buy them back. That's retired. That isn't self-employed. And then there are my 35 and 40-year-old viewers who say, you know what, Uncle Bruce, I too want to become self-employed, and here's what I've done. I have a house that I bought 5 years ago for $400,000. My wife and we had $100,000 down on it. We've been making payments for like 7-8 years, and we only owe $240 against it now, $235 against it, because we got a nice low interest rate when we first started out. The house has gone up to $700,000. I mean, it's crazy. It's up to $700,000. We are taking a loan against the house for $100,000. We're grabbing $100,000 in equity. Call it a second mortgage or a home finance loan, whatever you want to call it. And we have investments that we've been, trying to build up. And what we're going to do now is we're going to buy, we're just going to buy Apple stock with it. We're going to buy Apple stock. We've got $150,000 that we're going to cobblestone together. And we're going to buy 1,000 shares of Apple at $150. And we're going to write 10 contracts at a time, just like you're talking about. And when we write 10 contracts for $525 a shot, we bring in $5,250. And in about 2 weeks' time, we're going to buy those back for, we hope, $1, $1.50, $2. And then what? Well, we'll have locked in a profit of $2,500, $3,000, and we're going to turn around and do it again. We're going to write 10 more contracts for a month length at $525 and buy those back, and try to score $2,000 to $3,000 every time we roll over the 10 contracts. We're going to let them expire and depreciate, and we'll buy them back before they die out, and we'll write new. And rinse and repeat. And that way we can bring in $4,000 or $5,000 a month. And that just took care of one of the two of us to quit our day jobs. Now, we've been working from home. Who hasn't? We've been working from home, and now one of us is quitting the job we had, and that individual is just going to watch the market because that's what they really want to do. Or, you know what we're doing now? We're quitting a job with a company, and we're now freelancing for what we do. We're only now going to freelance our services out, and that way we're contractors. And one of us is going to become a contractor and build that up while the other one still has a day job, and we have this option money coming in. And as that business builds up, as that contracting, self-contract job comes in at double what we used to get paid at work, or triple, because when you're a corporation hiring yourself out versus an individual, yeah, the corporation gets more money. So you become a temp agency in effect. And you do the same work you're doing when you want on a retainer basis. And you might offer a corporation 20 hours of your work week available. I only have 20 hours a week available to work for you. I can't work 40 hours a week or 60 hours a week. Sorry, I don't do that anymore. But I can work 20 hours a week. But here's the hourly rate, and it's $80 an hour, $100 an hour, $70 an hour, whatever it is. And you calculate it before. I used to get $28 an hour working full time. I now get $65 an hour working as an agency, but I only work a third of the hours. I make more money than I ever made working full time because this is how I roll now. Oh, and by the way, we're writing options. That's what's happening here. People are building capital up to buy more Apple or GameStop, or they're buying other stocks to write options on, and they want to get to the point where they can write 15 or 20 or 30 or 40 or 50 contracts every couple of weeks. And if you can do that with Apple, if you can write 20 calls every couple of weeks or so and score a $250 a contract in premium money to you, times 20 contracts, that's $5,000 every couple of weeks. That's $10,000 a month on average. That has couples quitting their careers and walking away from jobs and supervisors and Zoom calls and weekend deadline crap, and it goes on and on and on. This is the big resignation. This is the silent quitting we talk about, but it isn't destitute situations. This is where people are going, I own my future. I own my life. And if I work for anybody, it's only on a contract basis, one contract at a time. And it might well be that I'll work for you for 3 months on this one deal, this one project. It's a 3-month project, and I'll put in 20 hours a week for you, 25 hours a week. This is the rate per hour. It's $80 an hour, 25 hours a week. It's $2,000 a week. Take it or leave it. Because I have this over here. Now, a number of you have said, I'm not even doing that. I don't even want that kind of stuff anymore. I only want to live off my option revenues. I want to live off my own investments because my wife and I haven't had a vacation in 5 years. The last time we had a vacation, we drove to somewhere for a week and the phone wouldn't stop ringing and the internet, the emails kept coming. It wasn't a holiday at all. And we have not ever been to Rome. We have never been to Madrid. We have never been to Tokyo. We've never been. We want to go places that we've never been, that we said we would go to. Now is the time. Or we've got kids and we want to take them to Disney World, or we want to take them to Disneyland Paris. I don't know. Who knows where you want to go? But we want to go. Well, with one of these in your hand, you're trading your options. You're watching your options. You're rolling over your options. You don't have to be at home to trade these contracts. Take this with you wherever you want to go. That's what's happening on this channel. I don't know what's happening on the channels you're watching, but that's what we're doing. Nazareth, thank you again for this very generous donation. Thank you. I appreciate that. You're all welcome to join Nazareth anytime you want. Thank you very much. Good job, dude. We profit from foolishness. There you go. Right on. Thank you all so much. I'm glad that you're here. So many of my viewers have been able to change their lives. And it's little victories here and there. I've had viewers who've watched me for months, and they finally say, okay, I'm going to watch some of your classes. Okay, I get it. You're charging $100 a class. You got 13 classes. I'll watch a class. I'll watch a class. and we'll see just what it's about. And they do that, and they don't tell me. This is quite. They don't let me know. They're just here. They're watching. They're not even members. They're lurkers. They call themselves lurkers. I watch Bruce, but I'm not a member. And I took a class, and then I took another class, and I noticed that his classes are in plain English. His classes on how to become an option writer are not all that complicated. They're not like a highfalutin fancy talk that some of these people love doing. This is the homepage, if I recall. Yeah, there's my homepage for www.stockmarkerswithbruce.ca. I mean, that's it. That's the web address. There it is, stockmarkerswithbruce.ca. I'm in Canada, homeless Canadian. There I am. But if you go to that website, what ends up happening is you go to where it says classes. There's this, and if you then scroll down, this is here's the first couple of lessons: an introduction on how to buy and sell call and put contracts, an introduction on how to write call and put stock option. This is the beginning of the beginning, and these are $100 a class, and you can take them whenever you want, watch them every time you want. They run about an hour and 3/4, 2 hours each, something like that. They're done in front of a live audience, all online. The audience you see talking here, many of those were in those classes. There's 13 of these, and we cover all kinds of stuff on how to be an option writer. I have viewers who start doing those. They watch 2 or 3 or 4 classes, and then they decide, I'm going to write one contract. I'm going to try one. I have some stock in XYZ. I'm going to write a call option on this, just like he's suggesting. And they do it, and they don't tell me. They just do it, and then they see the market moving and the contract moving, and sometimes they break even. Sometimes they make a little. Sometimes lose a little, but they notice all the other subtleties that I keep mentioning about the markets and how options react to stocks and everything else. But they also notice the time factor, and they realize, oh yeah, I sold the call at $2, and then I noticed a couple days went by and they were trading at 165, 175. They were down a little, and then the stock went up. The stock underneath that contract, it went up a little bit, and the call went back up, but the stock went up like 50 cents and the call only went up 20 cents. Why didn't it go up 50 cents? The stock went up 50 cents. Why didn't the contract go up 50 cents? Oh, it's out of the money. It's not in the, it won't go dollar for dollar. It won't perform as well as the stock does. But then the stock went up a little bit more, and I bought the call back for $2. That's what I sold it for. So I didn't make any money on the call option, but I noticed my stock went up $1 over 4 days. So my shares are $1 higher, which is great because I still have them, and I always will have them. The contract went down and then came back to where it was, but it didn't go higher. Even though the stock is higher, it didn't go higher. It just hung on to the $2 level because the time is running out on the contract. I'm going to write another one of these. Okay, I'm going to write a new contract $1 ahead of what the last one was because the stock has gone up $1. And now they do that, and a week later the stock drops $1, comes back to where it was 2 weeks ago. The call they wrote for $2 didn't go to 165, it went down to $1 or 85 cents. And they're realizing, oh, wow, this is really depreciating in price because the stock is backing off and time is running out, and they buy it back at 85 cents. And they go, I made $115 on this call option, even though my stock did go down, but it's just fluctuating. It fluctuates all the time. I just got paid money to offer my stock to somebody who never is going to buy it off of me. That's what he's talking about. And then they become members of the channel. They go, I've been watching you and I've been lurking around for a while. I want to talk to this family because I've been watching what everyone over here talks about all the time on all these options you guys are writing. And I get it now. Now I see what you guys are up to. Now I see why you're doing what you're doing, how you're doing what you're doing, what the ramifications are of what you're doing, how you're doing. And that's why this channel is what it is. That's what we're about. It's nothing fancy. There's no fancy graphics back here. No fancy fireworks shows. It's just the markets, and it's stocks, and it's writing options, and it's staying ahead of the carnage that's going on out there. You can make money on up markets, in bull markets. You can make money doing this in flat markets and in bear markets. It does not matter. And more and more folks are becoming more comfortable with writing options. They start small. They start with one here, one there, and then they slowly get into it. And after a few months of doing it, you become so used to writing calls. You're just going, writing a call is a nothing. It's a nothing burger. There's nothing to it. You write a call, you put in a bid to buy it back. It's keeping the change. That's all it is. And that's what we have going on here with a whole bunch of folks. Now, at the moment, you see 232 people watching me right now. I think that's what I see right now, my little thing. There are probably 10 times as many who are watching who are not members of this channel, or who are following me, who are not members of this channel. But they come and they go. We have people here who will watch 5-10 minutes. They'll watch the morning rant. They'll watch the opening. Then they'll leave. They'll come back in. They'll leave. Then there's those who watch the show on rerun at double the speed because they love hearing my voice at double the speed. And then we have, for Gold Bagel members, these guys right here. If you're one of these guys, top of the food chain around here, one, you get to comment, of course, on this channel as you would as a regular member. But on top of that, you join me here before this show starts, which is 8:30 Eastern time. You come in here for the trade alert, and we talk about what's happening overnight, what's been going on already, what you should be watching out for. And then if you're still also on top of that, being this membership level, Wednesdays, 8 o'clock Eastern time, prime time with your buddy Uncle Bruce for Gold Bagel members only. It's a free-for-all open chat. Ask me whatever you want. And we'll talk to you about your trading, your options, your account, whatever you're up and doing. We'll stay on top of all of that. So being a Gold Bagel member, you get 24 additional shows and more information from this guy on 24 different occasions per month above the regular membership level. If you're a regular member, Chillin' with Uncle Bruce member, it's about $10 a month. You get to comment here, show your emojis, hang out with the gang. If you're a Gold Bagel member, you get to do this and the pre-market show and Wednesday night primetime live. And I'm pretty sure that for $25 a month of being a Gold Bagel member, approximately, I think it's 25 US a month. For that, you are getting a lot more value for your money. And just one option tip that pays off for you. One option where you write a single call option on GameStop for $2.25 and buy it back for $1. You make $125. That's 5 months of this right here covered in one trade. Whatever you learn here every day, you get to use for the rest of your life. In the movie Die Hard, Mr. Takagi, who didn't answer the skill testing fill-in-the-blank questions, will not be joining us for the rest of his life. However, those of you here who are writing options and learning how to write options can do this for the rest of your life. And it makes this chump change right here no-brainer. But you're among a pretty good family of people here who respect each other, who respect this channel. And we love to have you join us and learn how it's done and become a successful option writer. Take it wherever you want it to be. Take it to wherever you want to go with it. You just want to make a couple of extra dollars in your account. You want to make a few extra bucks in your 401k. You want to build your retirement fund. You want to just enhance your pocket change. You want to enhance, you want to bring in $500 a month, $1,000 a month of extra dollars, writing very conservative out of the money contracts to help pay for a car payment, or you want to tackle a couple of credit cards that you've been carrying around a while. You're going to bring in 500 here, 1,000 here, 700 here, 400 here, and you're just going to throw that at that 25% interest rate credit card of yours, or 22%, whatever those are. You're going to get rid of those one at a time, which lowers your cost of living because you don't have minimum payments anymore. Those minimum payments are shrinking already. You want to knock off a car loan. You want to knock off student loans. You want to knock off a personal IOU to someone that just won't leave you alone. Whatever. It's up to you what you want to do with the capital. Roll it into more contracts or more stock to write more contracts. Up to you. Totally your call. You want to become self-employed? Really? You really want it? You better want it. If you really, really want it, you have to dedicate yourself to it. Just like if you wanted to become a plumber or an electrician or a carpenter or a legal assistant, you want to become a dentist, a lawyer, a doctor, you want to become any trade anywhere. I mean, if you want to become something that's licensed and can make you a decent living, more than minimum wage, guess what you got to do? You got to go to school. You got to go to college. You got to go to a trade school. You got to become part of a union. I don't know, whatever the trade, whatever that is. You want to become a pilot, you got to take flying lessons, and on it goes. You want to become self-employed, being an option writer? There's no actual school I can send you to. I can't send you to Harvard. You can't go to Harvard. Can't go to Princeton to learn this stuff. You can't go to the Wharton Business School. You can't go to Donald Trump University. As a matter of fact, you can't go to Donald Trump. You want to become an option writer full-time and change your life and your income level and maybe be not employed anymore to somebody else. You don't want to be beholden to anyone else. Then you better step up and learn how this is done. And the good news, if you want to do it through this channel, is I only have 13 classes. So that's $1,300 you can spend max. It's the most you can spend from what I got. Now, you can go to other YouTubers out there who will talk to you about how to become a great day trader and how to become a really smart investor and investing techniques and all this stuff. You can learn all this stuff. And there are guys out there who will charge you happily $2,000, $3,000, $4,000, $5,000, $8,000, $10,000, $15,000. They will charge you as much money as you've got to show you how to become a smart trader and all that. All I'm doing is I'm offering classes. And if you want to start at class 11, you don't want to do the first one, I don't care. Buy whatever class you want. They're $100 a piece. Watch them whenever you want. Watch them as often as you want. I would recommend start at number 1. It's the reason I started with number 1 and number 2 and just watch them in order. When you're ready, at your pace. You want to watch all 13 classes in 1 week? Knock yourself out. But if you want to do a class every week or so and build on your knowledge and kind of watch what we're doing here and try to put the 2 and 2 together, and you'll begin to notice, oh, that's what they were saying in class number 2. That's what they're talking about. Oh, I got it. Class number 4 comes through and you go, oh, I see what he's saying. That's what I learned the other day in class number 4. This is called university. It's called college, okay? Stock option writing college. 13 easy lessons at $100 a pop. It's up to you when you want to do it. If you want to take it further, apart from the classes and becoming a member here, there's one more step you can take, and that's totally up to you if you want. And that's doing what I mentioned up here. You probably see that over there as a message over there somewhere. Doing a one-on-one session with yours truly. If you want to have a one-on-one private hour with me where I'm on the air, I'm on the camera here, you're on the camera here, it's just us. I'll talk to you for an hour about writing options. I'll go over your account with you. I'll help you figure out what you're doing. I may be able to suggest you may want to sell this and buy that instead and then write options on this. We can work on that. It's $400 for an hour. Now, I don't recommend you call me up and say, I'd like to hire you for an hour right now and talk to you about my potential future that I might do someday on options. You're not ready. You got to take some classes, man. You got to make an investment. Find out if it's for you. And here's the other thing. I keep talking about hanging out with me and this beautiful group of people here who are members. There's something else you can do. And that is if you have an account with TD Ameritrade or Fidelity or Schwab, or whichever one of these platforms you want to deal with, and some of these folks will tell you the ones that they recommend. Some of these platforms offer you what we call pretend accounts, where you can buy and sell stock with pretend money, but actually buy and sell stock in the real market at real prices. And it'll show you, theoretically, if you'd have bought this stock and then you sold the stock the next day or the next month, here's what your profit or loss would have been. You can also write options this way. You can also write options in pretend accounts, where Fidelity will give you up to $100,000 to play with. It's a pretend money. You can't win or lose anything. Here's $100,000, knock yourself out. So then you begin to do what you might do with your own money. Now, you got to discipline yourself here, because you can go into fantasy land and lose all touch with reality here. But if you have in your hands assets worth $25,000 or $70,000, whatever the amount is, then I would recommend you only utilize the amount of capital that you actually own. And what you might do is you might turn around and literally purchase in your pretend account what you actually have in your account, wherever your account is. And now write options on that account, that pretend account, and see how you're doing by following what we're doing here and talking about and the lessons and all that. You might do that for a couple of months and find out for yourself if you like it, if you understand it, you can comprehend it, it makes sense to you, it's working, it doesn't work. You see some trades work out, some trades not work out. Why? You'll be able to analyze, what did I do wrong? Sometimes you're not waiting long enough for your return to come in, or you're too eager to trade. All this stuff that you can do with the platforms. I don't do any of that stuff. I'm just here as an advisor, as a guy giving you my opinion, and you have to make your own trades. Okay, you're not trading against me. I'm not trading against you. I'm just here as a commentator, and I'm giving you my 2 bits worth. It's up to you to decide whether you go with it or not. And there it is. There's the whole story. Welcome to the party, pal. It only took me 48 minutes to explain what we're doing around here every day, 5 days a week during market hours. We welcome you all to this channel, to the family of followers here, and you're more than welcome to join us, whether you're a Chillin' with Uncle Bruce member, a Gold Bagel member, or just a lurker. If you're just a subscriber, we love you. And we're glad you're here, and I hope you can make some serious dough. If you don't ever want to be a member, you don't ever have to be a member. If you want to just send me a message and say hi, you can always do a super chat. Send a $5 super chat, or $10 or $1 or whatever. You know. Say hi. Send me a question. I'll do the best I can to answer it for you. But you got to want it. You got to really want to do this. Of all the market people out there, just the last thing I'll mention, of all the people out there who play the stock market, and there are hundreds of millions in the world, I'm sure, many people only buy stock and sell stock. They might buy $50 of Apple and then try to sell it for $55, or they'll buy penny stock that they hear a hot rumor on and they're looking for the home run ball. There are those who buy stock options, and they'll buy 25-cent stock options hoping that they'll go to $1. They'll buy $1 contracts hoping they go to a $2 or $3 or $4 or $5. They hear rumors and stories in the newspaper out there about a college student took $5,000 and turned it into $250,000 playing stock options on blah, blah, blah. And they want to imitate that person. And they don't, because these stories are either fake, or they are 1 in 100 million to 1, a lucked out story. The end of the day, 99% of the market is where people buy something and try to sell something for more. They buy low and they hope it's going to go up and sell high. That's what almost everybody does. Here, we are the absolute opposite. It's true. We do own stock here. We own stock in GameStop. We follow IBM. We follow Apple, HPQ, Hewlett-Packard, Cisco, Pfizer, all kinds of stocks. We also follow a number of former SPACs that I've been talking about for a year and a half, and will continue to talk about. But at the end of the day, what we also do, a number of us here, a high number of us here, will write options against these positions. In some cases, we write options against some of the SPACs we have, but we also write for income generation, write call options on stocks we already own and that we want to own long-term. Nothing wrong with owning Apple for long-term hold, nothing whatsoever. But if you can be paid to hold it in the meantime and it helps you pay your mortgage, even better. And so option writers make up less than 1% of the market. 99% of the market is people who buy something to sell it for more money. 1% of the market players do both. They own stock and they write options into the market to bring income in for stock they hold. And that's what this channel is about. We are the minority. That's why there aren't 25,000 people watching. Oh, I've got a little meter up here. I think you guys have a meter down there. I have 254 people here watching me right now, not 25,400. If I was here to talk to you about a stock that's trading at 15 cents a day today, that's going to be $15 next week, I'd have 25,000 people here gambling their butts off to try to make money on that hot stock. I don't do that because there are no hot stocks that, that do that. People think there are, but there is no mother of all short squeezes waiting to be had today, tomorrow. That's not what I'm into. I follow stories like that. I'll comment on them from time to time, but I don't follow stories like that. We're here for a whole different purpose. We're bringing money into our account and into our hands on a consistent basis every day, every week, every month, every year to build the value of our accounts, take care of bills we've got, expenses, and there are a number of people here, a high number who are here that are watching me very quietly, not aggressively, what have you. Some are very, very vocal, who have had a terrible time in the markets the last 2 years, 3 years. They have followed every hot tip they've been given by every advisor, every friend, relative, coworker, hot tip on the Wall Street bets and all the other chat sites all over the place. And they got themselves into serious financial trouble. And there are a lot of people out there in the market. Of that 99% who are playing the market, a significant number of those folks have lost unbelievable trillions of dollars. Trillions collectively. Some of them are here. And they're saying to me, in the last month, in the last 3 months, in the last 6 months, the last year, year and a half, they have been saying to me, show me how I can make money in this market, because I got myself into a pickle here that is the worst of all time. I've got months to live in my financial life right now, unless I can turn this around. You tell me what I'm doing wrong. Show me how I can make some money on my portfolio. I got shares of this, and I'm getting blown out by all these investments. Show me something. And there are examples here again and again and again of people who come out and say, I've been watching this guy for 6 months, a year. I've been following these option trades. I've been doing these option trades, and I've gotten myself out of a real mess. I was fully margined out. I was fully overexposed. I was near bankruptcy. I was at wit's end. And then I learned from this guy, why don't you just write call options and bring in cash? And I started doing it very skeptically. I didn't believe in it very much. I thought, oh, I'll try a quarter of my account. What have I got to lose? I've lost everything else. I'll try a quarter of my account to see if this works. And if it works, I'll do more. And if it works, I'll do more. And here we are. We have people now who are writing contracts like crazy, who are saying, you've turned it around. I got half my losses back. I got all my losses back. I'm ahead. Others who said I've never lost money in the market because I only ever invested when I found this guy, because he's the first guy I can understand. It's the only guy I can understand. These other guys, I can't understand anybody else on the open market. I can't understand CNBC. I don't understand what they're talking about on Bloomberg. It's too complicated. This guy speaks plain English. I get this. And I'm following this guy, and I'm doing what he's talking about doing, and it is working for me. Welcome to the party, pal. I couldn't be more thrilled. Thank you all so much. Sophie, you are too kind. Join to be a member, take the classes, book the one-on-one calls, recipe for success. Sophie, thank you. Cindy, 151, hi. All number 151 thumbs ups have already come in here. We try to get every day on this channel, we try to get to 200 thumbs ups as quick as possible. I see now 158 have come in. Thank you, all of you who automatically give me a thumbs up without me begging for it. I thank you so much. If any of you out there are watching and you can help out by throwing a thumbs up on this show, please do so now. I'd love to get to 200 ASAP. And that just is it just shows Apple, or not Apple, just shows YouTube and Frisco. There's this channel with 251 people watching, and this guy's approaching 200 thumbs ups. What is that? No other channel does this. There are channels out there with 5,000 viewers with 350 thumbs ups. Then there's this guy with 250 viewers. He's approaching 200 thumbs ups in 56 minutes. What do they do over there? What? The YouTube artificial intelligent computers send more people to us because of this. And that grows the channel, which allows me to make a living doing what I'm doing, because the more of you that are here, I make a living. It's as simple as that. I don't make money trading stock. You make money trading stock, writing options, not me. And I live off tips. I live off of donations, memberships, classes, and one-on-ones. And if I wasn't doing anything correct, there would be no members, there would be no one buying classes, and there wouldn't be any one-on-ones. But there are one-on-ones. There are those taking classes, and there are members. And that's how this channel is here. And thank you from 257 people right here. Again, I'm pointing at what I see. There's my meter. Your meter's probably down there. 257 people here. No YouTube channel can survive with 257 people watching. Nobody gets to live with 257 people. You have to have income from other sources to survive on YouTube. If you want to become a YouTuber, you better have hundreds of thousands of views every day. Otherwise, you're done for. And a lot of people have figured that out trying to become YouTubers. I have one of the lowest viewed channels on YouTube because I have a select 1% audience here. I've got the 1%ers. The 1%ers of this market hang out here. And a lot of them who are here are not members. They're quiet. They just lurk. They watch. They learn. They trade. And I never hear from them. But once in a while, they kind of pop in and go, you know what? Since I've been watching you, I have made $300,000 watching you, man. Thank you very much. I want to have a one-on-one with you. Or I've taken my classes. I've referred you to some of my relatives who are getting their brains handed to them in the markets. But I've tried, Bruce. I have tried to get people to watch you, and they won't do it because they don't think they can understand it. It's unbelievable how many people let money slip through their fingers that could be saving themselves. But hey, welcome to the world. Welcome to the world. It's nice to have you here. Anyway, there it is, folks. Abraham, number 159. Hector, I am number 177 on your thumbs ups meter. I see 180 now, only 20 to go. Now 181, 19 left to get. Thank you all for being here this morning, joining me. We're about to start trading. Our buddy, our pal, Mr. Larry Titus is about to hit the thumbs up, the bells button. He's going to ring the bell for us here in just a minute. We're going to start trading and see what's going on. I see GameStop at 24. What is it? 24.62. Is that accurate? We seem to be under a bit of pressure there. Down a little bit this morning. We'll see how this all works out. Yep, we're down 42 cents on GameStop, which means anyone who wrote options on Friday and Thursday and Wednesday and Tuesday, you wrote the 28s, the 27s, the 26s, the 25s. You're all going, these contracts are falling out of bed. Indeed, they are. Mirko is here at number 182. Elisa completed another class this weekend. Rollovers. I'm learning all about rollovers. This is good stuff. Way to go. Beautiful. Alberto, lowest viewed, but largest returns. Why the face? Yeah, what the hey. Nick, number 185 thumbs up. Thanks, Nick. Appreciate it. Larry, thanks, pal. Ringing the bells. It's official. We're up. We're running. We're open for trading. We've begun another day of fun. And let's see how it all wants to play out. We're going to watch this market and see what it wants to do. The good news about being an option writer, you don't have to guess what the market is going to do. You let the market tell you what it wants to do, and then you trade accordingly. You only write options into the market that wants them. It's the opposite. It's the George Costanza channel is what we got going here. The opposite. Everyone out there across the board on YouTube and in chat rooms and all these other platforms that are out there, they are always, buy low, sell high. It's bargains, we're looking for a sell off and we get in. Around here, no, we get out and we get in all the time. And it's easier. It's way easier because we let the market tell us what to do. We don't have to guess. DH number 187. Thanks, pal. Appreciate this. Larry, thank you for ringing the bells. Thanks, Larry. As always, thank you all for being here. 267 of you here now. Thanks to see you. Nice to have you. Notice that Dick's Sporting Goods is going to hire 9,000 seasonal employees. I read something about, was it Macy's, 40,000? Now, I heard last year way more people being hired than what's being hired this year by certain companies. I don't know about you, but I've heard that. I think Amazon has said 40,000 instead of 100,000, something like that. Interesting. Obviously, we heard the word last week from Federal Express. It's actually been 2 weeks in a row. FedEx has been warning about lower package volumes. That's concerning. We'll watch for that. That's a slowing economy. That's what we've got going on. We're going into a recession, and we have higher interest rates that we had last week come through for the U.S. We got higher interest rates next month, guaranteed, another 3/4 point rise. And then the United Kingdom. Look out, UK. Noticing how the pound, the British pound, has collapsed. It was sitting at 112 a week ago, 106 this morning. It was at one point it was 103 this morning. It was 103 on the pound. Right now it's 108. It's just doing this ridiculous. It's moving like a currency moves in 2 years in 12 hours. Total uncertainty over there, total carnage. The euro is at 96.6. Those of you who have ever been to Europe, you know that when you use your credit card over there and you come home and you see the charges, you'll see the cost of the currency converted for you by your credit card company. You used to pay 130 for a euro over there. Your American dollar, it would cost you 130 American for a euro. Right now, the euros are less than a US dollar. But your credit card, don't worry, they'll add 5% for their handling fee. You're still paying 101 for a euro. Don't worry, you're still not getting par. Unless you got a decent credit card, which you can get. Interesting developments over there. Interest rates, oh my God, have they ever shot up? Interest rates have gone absolutely insane. The UK 10-year note is at 4.1%. The US is 3.7%. Germany is over 2%. Italy is at 4.5%. Really has gone up. The European markets have been under tremendous pressure. Asia markets were down upwards of 2% each. Just carnage going on. In any event, we're open. I'm showing the Dow down at the moment 62 points. I've got the S&P down 1.8 points. NASDAQ trying a little rally up 39 points. Gold is down 260. Oil is up 85 cents to 79.59. We're going lower on these markets. There's no recovery here. This is a dead cat open, dead cat bounce open for the NASDAQ. There's a little bump up. There is no strength there. There's no conviction here where people are going, I'm buying, we're going to double our money. No, that's not going to happen. No. It's going to be a scary stuff. Nick, look at the UBI leading the market, the Uncle Bruce Index. Well, here we are. We're down 69 on the Dow. Apple at the moment up 57 cents to 151 range. We've got GameStop down 7 cents now, 24.97. Let me refresh my big ass iPad over there. There it goes. It's down a dime on GameStop. SoFi is up 17 to 546, 547. Rocket Lab up 12 cents. HPQ down 2 pennies. AMC down 31 and Ape down 31. Oh, man. Talk about carnage at AMC. These poor people who are into this stock. You combine the value of the preferred shares that were dividended out for nothing to the common shareholders. We're talking $11 value combined now. The preferred and the common together is about $11. This was $27 a share when they announced the announcement had gone out and it were coming close to dividend day. These common shares were $27. AMC raised zero money when the stock was at 25, 26, 27, 24. They raised nothing. They have $5.4 billion in debt. The interest rate costs are rising for AMC every quarter now. The next 3/4 rate hike is coming from the Fed next month. If AMC goes to the market and tries to issue bonds, first, I don't think they'll find a buyer, but if they did, they're paying 14 to 18%. Shareholders of AMC are getting absolutely crushed. And all AMC did was double the number of shares outstanding by creating preferreds and common stock. Nobody wants to buy any of this stuff. And they're now $11 combined value. It is absolutely a crush job. It's so sad. It is too bad. ME up 13 cents to 2.90. Matterport up 18.5 to 3.92. ATIP down a penny, but it's at $1. SmartRent up 4.5 to 2.37. Spire up 3 cents to 1.10. Cyxtera's up 8 cents to 4.48. Bed Bath Beyond up 28 cents to 6.94. This was a $30 stock 6 weeks ago when Ryan Cohen was involved. Ryan Cohen is gone, and it's $6.94. Yuck. Tesla down 11 cents, $2.75 a share. Pfizer down 8 at $44. Boeing is up 36 cents. Cisco up 6. Twitter up 11. Home Depot up 194. Carvana up $1. Robinhood up 22. We're looking at, let's see here. Vanik up $1. SMH, the Vanik semiconductor ETF. IBM down 46 cents. Microsoft up 167. Goldman down 176. Google is up 29 cents. Amazon up 145. Facebook, Meta Platforms up 171. Yuck. Nvidia up 72 cents. Walmart down 96. Disney up $1. American Airlines up 1 penny right now. That's all at $12.22. Netflix up $3 to $2.29. Moderna $125 up $177. Costco up $5.58 to $4.71. Costco is still trading at 37 times earnings. It is still too expensive, and it's $4.71 a share. That stock has taken a cut. We're going lower. You cannot have high PE multiples in this environment with high inflation, higher interest rates, tightening money supply. It adds up to lower stocks. There's no if, ands, or buts about it. It's going to mean lower trading values for equities. The Dow's off 65. That's a nothing burger so far. I get it. We're up 2 points on S&P, and we're up 71 on NASDAQ. We're not going anywhere with these markets. They're going to go lower. So we got, anyway, that's the dealio. Nick is wondering, are there any short candidates right now? I want a short stock. Shorting stock right now is a sport that is being enjoyed by a privileged few who have a lot of money. But you've got to be careful in being a stock shorter. You absolutely are playing with fire. There are folks out there who are being offered by some brokerage firms up to 500% margin to short stock, where they have $100,000. They're allowed to short up to $500,000 worth of stock. Sounds great. The bad news is, and this is the bad news, you short something and it goes up 5% in value on you. You lose 25% of what you got because it's a 5-to-1 leverage against you on losses. If you win, it's a 500% win for you. Yes, the problem is that the losses can be unlimited, and brokerage firms that offer these kinds of margins have rules that allow them to seize your account, sell you out without notice if they feel you're overexposed. Now, there are viewers here who love to short, not many, but a few, and some of them are very good at it. They're very seasoned at it, and they're deep-pocketed as well. If you don't have 250 grand or more, you really can't go into the short business. It is a business that is reserved for full-time players of the market. You have got to watch every nuance of trading on a stock when you want to short a stock. You cannot be a casual short seller. There's no such thing. With the options market, you're kind of shorting when you're writing a call option. You're shorting. You're selling a call you don't have. You're looking to sell it up here, and you want to buy it down here. What you have going for you, however, is you happen to own the underlying security that represents the contract. So if you have 100 shares of Apple or GameStop or HBQ or Pfizer or Cisco, you got the stock. You've written a call against the stock. If the shares go up in value, you haven't shorted the stock. You're long the stock. Your stock's going up and you're richer. Your call will go up, but not as fast as the stock goes up. you can buy the call back and write another call further ahead in time or at a higher strike price and always stay ahead of the market. Your losses, there are no losses actually when you go up in value, because you win on your stock, you lose on the option, but the stock will go up faster further than the option will. And you're always gaining. It's when the stock levels off, the option keeps falling, starts to fall. And if the stock begins to back off, the option falls as well. And that's where you win on the contract side of the trade, which compensates for loss on the stock. Obviously, if you buy the stock at $150 on Apple and you write a 155 contract and nothing happens on the stock, stays at 151, 149, 150, 149, this contract will drop over here in value as time goes by. You will win on this trade in cash. This stock might end up at 150 a week later, and this contract drops by 50%. You're a winner in cash. Stock goes to 155. This contract may rise for a while, but it will back off because all that time premium will shrink out and will be replaced by book value. And it may not change in the end at all. It may be a $5 contract that you got, and that's what you're going to pay it back for, but the stock went up $5. You're a winner. You're ahead of the game. So even if the stock goes up on you, you can win on this business. And so that's the beauty of being an option writer. On shorting stock, if a stock is at 150 and it goes to 155, you've lost $5 a share. If you leverage that short trade by 500%, you've lost 5 times the amount of money than you started with. So if you started with enough money to buy 100 shares or to control 100 shares, and you short 500 shares because you have a 5-to-1 leverage on margin, you find that the stock goes up $5 a share. That is a $500 gain for 100 shares. That is a $2,500 gain for 500 shares. And you only had 15 grand to start with. You're now down to $12,500. You've lost 2,500 because it went up. You're a shorter. You don't want it to go up. You want it to go down. And that's where, being a shorter, you must be extremely careful of what you're doing. And you have to be very well funded to do it. And you better be in front of your computer nonstop every second of the day that you're shorting stock. It's that intense. Most short professionals, short trading professionals at hedge funds, mutual funds, and everywhere else, these folks trade in pennies. They'll short a stock at 150 and buy it back for 149.90. They'll short 5 million Apple at $151 and buy 5 million back 10 cents later. They're in for pennies, not dollars. They're in, they're out, or they're out and in. Basically, they get out, they get back in very quickly. And they also have stop loss orders all over the place to protect them against sudden movements. And they'll get blown out of a position in seconds if they're wrong. They'll be blown into positions in seconds if they're right. And they'll trade hundreds of times a day trying to score pennies per trade. It's a very intense business. It's a young man's business. And it is extremely speculative if you're on the wrong side of the trade. It can be a very scary position to be in. Just saying, you have to be very careful on how you play the markets, all right? Mirko, hey, Uncle Bruce, I'm looking at ARKK right now. Those are the Kathy Woods funds. $42 for the fund for October 21 at 154. Stink offer. Would you sell that right now, or would you sell 41s? Or 41.50s. Right now, there are 38.70 right now on the open market. So ARKK units, the ETFs, are trading below these prices, and Mirko is thinking about running a call option that is out of the money. What to do? The units are 38.49, up 66 cents. So there's a little pop on them right now. The low of the year, 35.10. The high, 125.86. My God. So if he's going to write, which ones should he write? There's the question. Should he write an October 21 call? That's the third Friday in October. The busiest option series there are is the third Friday of every month. And in this case, October 21st is the third Friday of October. Should he write 42s? He could try to sell them for 154. They're out of the money quite a ways. Or would he sell 41s a little closer, or 41.50s? he could get a little more money if he sells lower priced calls because they're closer to the money. The further out, the more conservative it is, and the more he can relax. He can watch these units go up a couple of bucks and not even worry about it. But if he writes a closer in, lower price, strike price, he gets more money up front. And if they stay under the 41 level versus the 42 level, he wins even more. How do you go about it? That's the question. I love any of those trades, to be honest. And because Mirko is a full-timer, Mirko is watching this market very closely at all times. Mirko could easily write 41s and be comfortable doing so. Mirko can always have an eye on the stock. He'll always be watching it from the corner of his eye. If in the next week or two we get into October 7th, October 12th, the shares are sitting around here at 37, 36, 38. These 41s and 42s and 450s, they'll all drop in price. They will all drop by at least half, maybe 60% off. He could then pick them up for 40 cents on the dollar or less. If he waits longer and the shares don't even break 40, these units can't break over 40, he will score 75%, 80% return on these. If you can write 2 or 3 or 4 of these things, you write $4.54 contracts. Each contract brings you $154. So you write 4 of them, that's $600. If you own 400 ARKK units, you can write 4 calls. Well, you bring in $616. If you can buy them back for a third of the price, a couple $100, you keep $400. Well, there's $400 against your 400 share position. And you get to write again. If this is a 2-week trade and you can bring in $400 every couple of weeks, that's $800 a month on 400 units that he's looking at. That's the kind of question that's being asked of me right now. If he wrote 41s, he could probably get closer to $2 for those units. He might buy them back at 80 cents, $1. Again, he would make a little more per unit, but he's a little closer to the market. And so, Mirko, you can go either way on these. You really, I think you're a winner any way you want to go on this. Olivia is here saying, Bruce, just so you know, while you've been yapping away, talking to everybody about everything, I silently became the 203rd thumbs upper for your channel today. So take a look right now. You get 205 of them. 205 thumbs ups have come in on this show from right now 277 people watching. Thank you all for the thumbs up so far. Keep them coming if you can. Let's get to 225, 250. The more the merrier. Thank you all. But that 200 level has been hit. I always aim for that, and I thank you all so much. This is the why we're here, says Alberto. He gives us the market in plain English. Love this channel. Thank you, Alberto. Thank you so much. Zed Estate, I'm number 206. Just, let you know. And that little picture of that BMW right there, he drives that, and he makes payments on that car from option premiums. He writes call options. He pays for his car from option premiums. He drives his options around town. Love it. Love this stuff. Way to go, you guys. Beautiful stuff. Giddy up, giddy up, giddy up. Michael is asking, is there anything wrong with buying 5,000 SoFi on margin, writing $6 for this Friday, taking in about a thou, and then if you get exercise, so be it. It's a win-win. Well, this is an interesting question because the shares of SoFi around are 536 as I see it at the moment. The catch, of course, is that 5,000 on margin, 5,000 shares is about $27,000 purchase. Depending on the brokerage firm, you may have the ability to buy this stock with half the money, and the other half the broker will, quote, lend you. That's the theory, right? Now, the catch, of course, is if you do write calls against your SoFi, the question is, what kind of premium can you really bring in against the stock? Let's take a look here. I'm showing now the market of $5.40 a share, up 9 cents. The high today was $5.50. The low is $5.29. Okay, so $5.40 times 5,000 shares, $27,000, right? You need 13.5 minimum to do margin of purchase. Let's say you got 15 grand. You got 15 grand, you buy 5,000 shares. All right. If you're going to write calls for this Friday, A $6 call will bring you 5 to 6 cents a share. The most you're going to get is $250 because a nickel a contract, a 5 to 6 cent bid is what the contract is bidding for. That's $5 to $6 a contract. You can write 50 because you have 5,000 shares. So you can sell 50 contracts at $5 a contract. You'll bring in $250. That's the most you can make on this thing if the stock stays under $6. Now, let's just say for the sake of argument, the stock does go up. All right. It goes to 610 on Friday on expiry date. This contract, you'll be bought out at $6. You'll be taken out at $6. So you'll get $6 for a stock you paid $5.40 for, and you get to keep the nickel premium you got already. So you can keep the $250, and you'll get $6. Well, look, if you buy the stock today for $5.40 and it's $6 on Friday, and you didn't do anything, you're making 60 cents a share anyway, aren't you? But what if the opposite happens? What if on Friday the stock's at $5? It doesn't fall out of bed, but it doesn't go anywhere, and it's at $5. You bought 5,000 shares at $5.40. You've lost 40 cents a share on the stock. That's $2,000. You're down $2,000. Problem is that 13,000 some odd dollars of it is borrowed money, right? I mean, you put up 15 grand and you borrowed the rest. Well, your borrowability, all right, 5,000 shares at $5 a share, that's $25,000. The most you can borrow is $12,500, half the value. If you put up 15 grand today and bought 27 grand worth, you owe $12,000 against the position. If your stock drops to $5, you can only borrow $12,500 against the 12 grand you owe these guys. You only brought in $250 in option premiums. So you only lowered your cost by $250. That's not getting you very far. You have now $750 of protection against being called in for cash. Shares drop to $450, and they can do this. Not that I want to see it, but let's be real. It could happen. Well, at $450, these shares are worth $22,500. The most you can borrow is $11,250. You owe 12 grand against this stuff. You have a margin call. The premium isn't enough. 6 cents isn't enough. Now, if you were to write a $5.50 contract instead of a $6 contract for this Friday expiry, you can haul in 19 cents a share times 50 contracts. So it's $19 times 50 contracts. That's $950 or something like that. Or, yeah, something around that level. So it's $950 against your debit, which could be, as I said, if you have 15 up front, you're spending $27,000, you owe $12,000, less $900, now you owe $11,100. Stock doesn't go over $550, keep all $950. Stock goes to $560, you made 20 cents on the stock, right? It went up. Well, you're going to get bought out at $550. So you can make a dime on the stock because you paid $540 for it. You get taken out, you make $500 on the stock, and you get to keep the premium of $950. You made $1,450 net profit using 15 grand between now and Friday if the stock closes at $560 on Friday afternoon. That's how this game works. Okay. Now, if you want to write a contract into October instead, you don't want to write a contract for this Friday. The next one you could write is an October 7th contract. You could write a $6 contract for 13 cents, or you could write a $5.50 for 30 cents. But you know what? For an entire month of added time to only get 11 cents more for a $5.50 contract, not very exciting. I wouldn't be all that gung-ho about that deal. And on the $6 contract to go from 5 cents to 13 cents, not very exciting either. So, I wouldn't necessarily buy the stock on margin at all. I would only buy the stock with cash and then just go with what you got. You either make a capital gain on the stock itself, hoping it'll go higher so you can write a higher priced contract later on, or you buy the stock at $5.40 here for cash, and you write $6 calls for next month and bring in 13 cents, or write $5.50s for next Friday and bring in 30 cents. But I don't like that trade. I'm not that excited about that trade. I got to wait 5 weeks to score 30 cents. I'm not so sure I want to do that because this stock can move up $1 in a day. I would like it to move up $1 a day every day for the next 2 weeks, but it's up 13 cents so far. So I'm not 100% sure I want to be putting that kind of leverage on a stock that is this cheap, has come down from the 8 level to here. Once was 25, a couple of times 25. This is such a winner of a company overall that I'd buy it, but I would buy it for cash and hold. But there you go. But if you want to write options, you can buy other stocks to write options on. And that's what Merco's doing. Merco is going, well, look, I have some of these now, but anybody could buy a unit right now on ARK Investments for 37 some odd dollars. So for $3,700, you can buy 100 shares of ARKK and then write a call like he was talking about here, 154 premium up to about a $2 premium. That's real money for a short-term situation here. Not a bad way to go. Anyway, there it is. Okay, America. Okay, I'll write 541s and stink off of them just below $2. Let's see if they hit me next Friday. My bad is what I'm doing, says Michael. Dave, the Mac guy, 6s on SoFi for this Friday have no value. That's it. When I was looking at the chain next week, 6s were closer to 20. They do fluctuate, though. There's no doubt about that. Credit Savage, good morning, fellow degenerates. Hope everyone is having a good day and buying back covered calls, deploying stink bids right there. Credit Savage, buying on margin is just silly. You know how we feast on silly and dumb characters buying our options when decay in a week or two? That's how brokers feel about people buying on margin. That's right. I say go with cash. Fair enough, says Mike. I was taking a quick flip, and I hear you. I get you. I'm with you. I understand what you're saying. I understand what you want to do, but I don't like these lack of premiums. Now, look, the stock's 543 now. It's up another few pennies. If this stock got to, say, 575, and those 6s for Friday could get you like 12 to 15 cents, maybe a shot there. But if the 6s for October could get you 50 cents, and you're at a 575 market here, a 565 market, now you might have something, but not on margin. I would do it with cash. Dave, the Mac guy, once you get to a certain number of shares, each time you write, you'll collect enough premium to buy at least another 100 shares, which lets you write another contract next time. Rinse, repeat on stocks you want to hold. Alex, good afternoon, all from Inflation Island here in the UK. The question I'm asking myself this morning is, what are the chances of a 1,500 to 2,000 point drop on the Dow in the next few weeks? Well, it's always a chance, but the bad news is out. We had the 1,200 point drop a week ago Monday. We've had a bad week last week. We're still under pressure here. We're down 90 something points right now. If I'm not mistaken, 77 points right now on the Dow. We're down was 100 points now on the Dow. We're unchanged on S&P. We're up 88 on NASDAQ. We can certainly drop more. I don't know about a one-day drop, but over the next few weeks, you could be right. But it could be very selective. Remember, the Dow is made up of 30 stocks only. The S&P 500 is made up of 500 stocks only. So could we have a 10% drop in the S&P over the next month or two? Yes. Which stock will lead the way is the question. The number one stock that could lead the way is Apple, because it's the number one stock. Will it, though? Will Apple only drop 3 or 4%? And will other stocks behind it drop 15 to 20%? That's the big question. Writing options on Apple is a great way to protect yourself in your investment. If you bought the stock at 150 and you're writing 155s and bringing in $5, and you buy that call back for $1 in a couple of weeks, you've just taken $4 from the cost of that stock. You're into it now for 146. And if it's still 150 a share, you write another 155 contract and do this all over again. If you can bring in $4 and another $4 and another $4 down the road 2 or 3 months, you're only into the stock for 138. That's the beauty of bringing in $4 at a time in premium. You're reducing the cost of your stock, and it stays at 150 range, give or take, and you keep writing these 155s. Hey, you do this 7 or 8 times, you've brought in $28 to $32 in cash against the cost of your stock. Yeah, you're into the 1 teens for cost. Smart move. Makes it easy to hold stock long term. Okay. Uncle Bruce explained the 2,000 point drop on the trade alert show today. Dave, Mike, I'd use your margin account then to Start selling puts on SoFi at a price you want to own versus trying to flip into extra shares. Credit Savage. I think Bertie has the best strategy, which is sell SoFi covered calls and use that money to buy more SoFi. He's been doing it a year and has amassed over 100,000 shares. Nothing wrong with any of this. Dude, I'm just here sitting with my arms crossed right now. I sold an October 28th GameStop $25 call for $4.95 2 weeks ago. I'm in the money with my arms crossed. I'm waiting for time decay. The stock is $25.16. They're worth 16 cents in book value. He got $4.95 for them. That is a lovely, lovely position to be in. Buy these back when you're ready. I love the way this works. Let's take a look. I'm just curious what his contracts are trading for right now. Let's move up here to October the 28th. My quote's 10 minutes late, but let's see what we got. The stock's at 25.16, and let's see if we can get the October quote to pop up here. October 28th calls. Here we go. Here we go. There they are. Those were, what were those? 25s. Yeah. The 25s are 264 bid right now. There's a buyer at 264. He sold them for 495. So he's ahead of this trade already, $2.30. Am I not mistaken? I think that's correct. But you know what, dude? Another week from now, the stock sits around these levels. These contracts are going to be, well, let me take a look at the contracts that are 1 week closer in, which are the October the 21st. Those are sitting at 241 bid. That's 25 cents less. The contracts that are 1 week closer to the nose, October 14th, they're 201 bid. They're only worth like right now 16 cents. Nice. The calls that are trading for October the 7th, the 25th, they're 154 bid. So they're going from 260 to 150 in the next couple of weeks, just on time depreciation. Obviously, if the shares have a dip today, the shares go to 23.75 this afternoon or tomorrow morning. These 25s that dude wrote aren't going to be 260 bid. They're going to be 180, 160 bid. He might buy those back there. He might say, I'm going to take 330 a contract off the table here with this contract. That's $330 per contract I wrote. You know what I'm going to do? I might just write another $25 contract, but it's going to be a November 5th to 10th, 15th, somewhere out there contract. That will bring me more money. I might do that. We'll see. The further the stock drops, of course, these contracts have no value. They could depreciate for zero. And that's a nice little return here. $495 from 2 weeks ago. Look, if this week dude buys these back for a $300 profit, it took him 2 weeks to make $300 on a $495 contract. That's a nice little trade. And now you might write 24s for early November, bring in $5 again, and rinse and repeat as many times as they give it to him. Credit Savage, Alex, I hope the Dow drops to 20,000. So 99% of investors get desperate and sell me all of their shares at insane prices. 5 years would be laughing on some island. Coyote, that's literally what I did on SoFi. I wrote on it since last summer. I brought my average down from $16.50 to $8 while amassing more SoFi to write on. Alex, Credit Savage Wall Street, me too. Nick, I am shorting WYNN 6588 on any drop below. I'll be cashing in. We'll see what happens. Coyote got some fun writes off this morning. JR, so Alberta can write 1,000 contracts at $6 strike for 40 cents and collect $40,000. $40 a share times $1,000. Yeah, 1,000 contract. Yeah. Well, you know, when you play big, you win big. I mean, it's as simple as that. Now, of course, if the 100,000 shares go to $15 a piece, there's $1.5 million of value. And then you write 1,000 contracts at $2 a pop for, say, 17s for a month or two out, bringing in 200 Gs. Yeah, it's a little different area code, isn't it? The air is a little clearer up there, isn't it? Coyote, yeah, that's the power of capital. That's right, babies. This channel here has got viewers. We've got viewers here that are sitting on 5,000, 8,000, 10,000, 15, 20,000 shares of a whole bunch of these SPACs that we just keep averaging down on. And it's true. You can write calls on SoFi. You can write $6 calls for a month from now, 2 months from now, 3 months from now. You could write $5 calls. You could write $10 calls on SoFi. If you want to write a $10 call on SoFi that's good until January 23 or January 24, you can bring in over $1 a contract in cash. Use those dollars to buy more shares at $5.42. If you've got 1,000 shares now and you can bring in $1,500 from writing options, you can buy 300 more SoFi, which means you can write 3 more contracts for $1.50 a piece again. That's another $450. Add $50 more, $100 more, get another 100 shares. Now you're sitting on 1,400 SoFi instead of 1,000 SoFi, and you brought your average down. If your average is $14 and now you're buying 400 at $5.40 a share, you're bringing your average down very quickly, under 10. There are people here who have 5,000 SoFi. They could write 50 calls for $1.50 a call, bring in $7,500, and they can buy 1,500 more shares right now. Write 15 more calls and bring in $2,200. It's mathematics again and again and again. Absolutely. And they're sitting with $10 contracts. They're locked in. They've offered their stock for $10 a share to whoever wants them. And as long as they stay under 10, those contracts will shrink out in price. They go to $9.99 by January 2024. The contracts will have zero value. They'll be able to buy back for a penny or two and now write calls again. They could write $15 calls for a year and a half out, probably bring in another $1.50 a share. They could do that. Again, it's a question of just how you want to do this. Isn't this fun? It's a contract bonanza. You got to love it. Oh, beautiful. Alex, everything's green in my watch list right now except the Dow. Right now. Unbelievable. Yes, it is most amazing. We have the market down 106 on the Dow. Apple's up 244 to 152.87. We've got GameStop sitting at 25.27, up 23 cents right now. We've got, there we get that market up there. We've got the market now down 51 on the Dow. We have the S&P up 4 and NASDAQ up 107. NASDAQ is desperately trying to get a positive day going. It's been red for a couple of weeks. I don't know if it's going to have any sustained buying power or not. SoFi's up 12 cents to 5.43. Rocket Lab is at 4.25, up 13. HBQ is up 2 cents, 25.38. The AMC Ape share combo down 58 cents today. ME up 10 cents. Matterport up 23. ATIP is up 3 to 104. SmartRent up 7.5 to 240. Spire's up 6.5 cents to 113.5. Sixter is up 5.5 to 445. BlackBerry, Bed Bath Beyond is up 24 cents. Pardon me. Bed Bath & Beyond is up 24 cents. I'll get this. Tesla's up 11 cents. It's exactly how option writers love Tesla. You write calls on Tesla for $280. You bring in a fat premium, and the stock sits here flat at $275. The calls are $560 out of the money. Every hour goes by, the calls shrink. They expire this Friday. They expire next Friday. They expire the Friday after that. You got to love it. Even if the stock pops, you don't mind. You don't mind if the stock pops because the contracts will now become book value traders versus time value traders, and your stock is going up in value underneath it. You'll do rollovers if necessary. Not a problem at all. I see the Dow down 118 points. I've got the Dow S&P up 1, and I've got NASDAQ up 100. So we got selling waves coming through, computer trading programs going through, all kinds of shenanigans going on. But I don't have a lot of confidence in the upside of this market right now. I'm happy to see option writers right. All right, what else is going on here? Credit Savage. I just bought 10 October 21 $65 puts on WYNN for 335 each. So let's see what happens. It just jumped over 10% for no reason, and the economy is not great. Well, good luck on that. FL, NASDAQ, please don't go up. I'm short. JRP. So So do most of you here concentrate on one or two stocks at a time? My head swims when I try to take on more than that. As for some folks, they like to try. They'd like to trade just one stock. Others like to trade three or four or five. It all depends on your how much time have you got and how intense you want it to be. Gowdy, JR, I focus on 3 to 5 at a time. Nick, I have shorted ENPH at 286.4, Foot Locker 34.79 also, and I'm waiting for the drop. Coyote, my big issue when I first started trading was trying to get into too many stocks. It's better to find a few you can get real intimate with and to learn the ins and outs and the supports and the resistance levels and the volumes they trade, everything. Yeah. Pappy, JR, Bama Babe, and I look at 3 to 5 also. Mirko, JR, nice mug. There you go. Giddy up. What can I say? Look at that mug over there. JR's got that. Oh, stock markets with Bruce. Look at that mug over there. That's a pretty looking coffee mug, I say. I like those. Nice job. Congratulations. You can pick up merchandise from this channel if you want. Just go to my homepage, Redbubble. That's where you want to go. There's a logo on the top of my page for Redbubble. If you're really slick, you can pick up one of these guys. Stink Bids Save Lives. Pick up one of these. These shirts came out last week. We got them for men and women. We've got hoodies. We've got sweatshirts. We got colors in white, black, red, green. We have white shirts with black lettering. We have black shirts with white lettering and all kinds of combinations in between. Now, if you order the white shirt with the white lettering, it's going to be a white shirt. If you order the black shirt with black lettering, it's going to be a black shirt with nothing on it. But you can make any kind of combination you want. You can also buy these shirts right here, Stink Bids Save Lives. If you want to get one of those, all kinds of colors and all kinds of styles. You can get these logos on coffee mugs. You can get these logos with travel mugs. You can get these. You can get this logo here on a coffee mug if you want. You can get I believe you, but I don't trust you logos. You can get hats. There's a hat from my Traveling with Bruce channel. Here's a coffee mug right here, travel mug, Uncle Stockman's Uncle Bruce. You get all this stuff on my Redbubble store if you want, and then you'll be just as cool as Jen and I when we go out on the town and we show off our stuff, and she gets on her swanky little dress and we go grocery shopping together. We go out to movie premieres, and I can't help myself. I'm just so giddy when I'm with her. You know, she's so hot looking. Sometimes I'm a little goofy because I'm on the air so much, and she kind of hangs to my hand and she says, "Don't worry, I'll hold you up. I know you're only 4'8" tall, and you've got those extensions there on the bottom of your legs. So I'll hold you up there, Brucey boy. Don't worry about that. It's all good." Jen is just great. Notice how she's always hanging on to me. She's holding me up so I don't tip over. Isn't that great? You gotta love it. You know, and when you get a Jennifer Aniston, hot looking wife like that, you want to show her off, you know, and she likes showing me off because of all you fantastic option writers out there. It's great. I can't complain. It's all good. It's all good. Nazareth, JR, I trade about 10 stocks at a time, but lots more contracts. I just do one trade at a time. Don't look at the big picture when you're trading. Constantine, Uncle Bruce, is there something wrong with writing cover calls, buying back the same day for profit, and do it a few more times in a day if the market's in your favor? There's nothing wrong with that. You can day trade contracts all you want. Take the money if you want. If it's working for you, run it. I might snag a Bruce crew neck, you know, says Olivia. I might want to get one of those. Mirko, nothing wrong with making money. That's right. Gowdy, just as cool as the other side of the pillow. That's right. Nice and cool. Gowdy, did Jen leak the Friends finale to you privately back in 2000? Whatever. I can't comment on that kind of stuff. Those are secrets. You know, I don't want to get into that. I don't want to get into trouble. You know. Cheers, all of you, for being here with me today. Hope you're doing all right following this market with us. So hope you're doing okay and enjoying these markets. We're down 55 points on the Dow Jones. Apple's up 271 a share. We've got GameStop down up 30 cents right now to 25.34. Not really going anywhere. SoFi 546 up 15, a little better there. The Rocket Lab up 19 to 431. But it's a mixed market, some red, some green here and there. We're down on the Dow. We're up on S&P. We're up on NASDAQ, but not up a lot. We're up a little, but not a lot. That's what I seem what I sense is happening here on this market right now. Let's see here. Constantine, I've sold and bought back the same contract literally 3 or 4 times in the same day. It's what we do. And there are some folks here who will trade 10 at a time, and they'll write 10 contracts for $250, buy them back for $226, sell them for $249, buy them for $226, sell them for $234, buy them for $111. I mean, day trade them 10 at a time, making 20 cents a contract, $20 a contract, 10 times in a row. That's $200 per flip, and they're flipping 4 or 5 times in a day. Sometimes it happens that way. Sometimes it gives you that, but you got to be on top of this. You got to be a full timer. You got to look for all the subtleties. You got to be willing to take your stand on it. And there you have it. But the beauty about it is that you write a call that's out of the money and it's all time premium. The time will make you a winner in the long run. The depreciation of the contract, because it runs out of time to live, is where you make your money. Some folks like buying and selling the same call that expires this Friday. They only play calls that expire in 4 days or less. And those are the ones they're going with because the time factor is coming in right now. And they'll sell for 85, buy for 61, sell for 74, buy for 52. So, they'll do those trades as it goes down and down and down. They're out to get in, out to get in, out to get in. It's all up to you. Whatever turns you on. What comfortable trades do you like? I like it when folks write 1, 2, 3 weeks out for fat premiums. If you can bring in $250 a contract and buy back for $1.10, lovely. A sell at $260 and buy for 84 cents, even lovelier. There's some nice profits there, but it's up to you how you want to do it. Okay. Ed Hawkins, thoughts on $6 January 23 SoFi covered calls for 75 cents. I have 2,000 shares with a $6 average. So should I write a $6 call, good till January 2023, bring in 75 cents? That's $1,500. I could turn around and spend that $1,500 on 300 more SoFi, and I'd have now 2,300 shares. What do you think about that idea? Well, your average is 6. You're selling for 6, but you're getting the 75 cent premium. In other words, if you end up with 2,300 shares and you write 3 more calls for 75 cents each, you'll bring in another $225. And you get taken out at 6. All right, you get taken out at 6 for all 2,300 shares, and you keep this $225 leftover change. So there's a gain there of the 300 shares at 6. That's an $1,800 gain there. You could lock that in, sure. You could also go further out and say, I'm going to write January 2024s on these SoFis, and I'm going to take an even bigger premium in. And I want to buy even more stock. The game for me is I don't mind being exercised at 6, but I don't want to be exercised on 2,000 shares. I want to be exercised on more than 2,000 shares. That is what I'm really after. So you take a look at January 2024 calls and see what kind of premium you could bring in on something like that. Well, if you go out to those, the 6s, I don't think you can get 6s, I guess. You can write 5s for 202. That gets you 707 or 702. If you write 750s, you'll bring in $1.23. So writing 750s, bringing in $1.23 times 2,000, that's $2,400 almost, a little over $2,400. That would let you buy another almost 500 shares, which would write 5 more contracts at $1.23 each, bringing 600 more in, buying another 100 shares, bringing in another $120. So you'd end up with 20. What did I say there? 25, 20. Is it 2,600 shares? Forgetting my own math so quickly. 2,400 and then 500. So yeah, you bring in 600 more shares. So you'd be taken out at 750 for 2,600 shares. That's a big gain. That's a big, fat, juicy gain on this position that you're sitting on now. Because right now you have 2,000 at $6. You paid 12 grand for them. So you got $12,000. But if you get taken out of 2,600 shares at 750, that of course means the stock goes up but you've got the 600 extra shares at a higher price. That's a win on top of a win. Now you are really scoring. So, I mean, it's a food for thought. I mean, you can consider it. Mirko, I just sold 10 GameStop 2550s for this Friday expiry 109. There you go. So he's writing calls that are 8 cents in the money because we're at 25.58. And he just took in $109 a contract, $1.09 a share. So, okay. He's actually offering his stock for $26.59. Add 109 to the 25.50 strike price. He's saying, I'll take 26.59. But what Mirko will do, most likely, he'll watch the stock here by Wednesday afternoon. If the stock is sitting at 25.50 a share, these contracts are going to be 70 cents. By Thursday, they're going to be 40 cents. Friday morning, they're going to be 20 cents. He might buy them back at 50 cents, 40, 30, 20. He's gonna, that's his plan. That's the whole plan. What's the whole plan? Sell at 109, buy for less than that. If the shares want to go to $27 tomorrow, fine. Mirko is an easygoing guy. He's going to say, oh, stock's $27 and my contracts are $1.50 in the money. They're probably trading at $2. Oh no, I'm down 90 cents on my contract because my stock went up $1.50. Oh, I'm richer because my stock went up $1.50. I'll buy these back at $2 if I have to, and then I'll write 10 contracts for $26 strike for next Friday or the Friday after that. I'll probably bring in $2 for those, which will make it a break even on this buyback resell. But I moved up $1 on my strike price. Go up another $1 for iCare. Make me richer. Mirko's getting richer no matter what happens. You gotta love this. JR, Constantine, this is how I'm making money. I did that several times last time the market dumped. Constantine, thank you, everybody. Waiting for my stink bids shirt, says JR. Mirko, GameStop, you can stop shooting up now, please. You can just stop going up. Ed, remember that SoFi has earnings late in October, now early November, and the numbers are going to be insane. SoFi may pop $2 more next week. You may want to wait and write 7s or 8s, but it's up to you. That's exactly right. You can always roll up $7.50 contracts. If you write 750 SoFis and the stock goes up, you can always buy those back and write 10s. You can always do that. You could. You don't have to, but you could. Michael, I've literally bought back contracts within 20 minutes. In the past, I've written and bought back. My hardest task is to fold my arms and wait. This is so hard. Bit of a rally today. W. Walters, I am thumbs up. 223. You guys are awesome, man. 223 on the thumbs up meter. Keep them coming. That's right. I remember the good old days, says Credit Savage, when SoFi was $12 and I sold a $13 covered call for a month out. And then that morning, SoFi would drop $1. So I'd buy back within 15 minutes and I made $900 more. It was crazy. It was beautiful. JR, Michael, I've done the same thing. I write and I buy back. I keep the change. I write and I buy back. GameStop, 25.24, up 20 cents. 25.24 gain on GameStop. That's all she wrote at the moment. And now I see it at 25.72. I'm not sure who to believe. Who's right? Is my big-ass iPad correct? Or is my telephone correct with Yahoo Finance? Getting all kinds of stupid quotes. 24.80, 25.72. Tell me what's right. I think it's 25.72 right now. Anyway, weird on these markets. What else is going on here? It just, JR says, it takes time, classes, observation, listening, and waiting. Money to be made, but it takes an investment in education. Exactly. You want to become a brain surgeon? Go to medical school and specialty medicine for a decade. You want to become an accountant, just a bookkeeper? You can take a college course. You want to become a CPA? You got to take more classes. The more you put in, the more you get paid. Because if you're a CPA, you get more than a bookkeeper. Coyote, I have SoFi earnings November 9th on my calendar, says Coyote. Brian, good morning. GameStop taking a shot, so we're writing some cover calls today. Is that what's going to happen? Maybe. Nazareth, I sold 38 GameStop contracts. $25 strike for October 7th for $375. Bought them back today for $162. Not a bad little 50% profit. I'll take it. Waiting for this pop, and I'm going to write again today. There you go, Nazareth. You got to love the way Nazareth does this. Sweet ride. Nothing wrong with any of this action whatsoever. Nicely done. Gowdy, Brian. Yes, sir. Credit Savage, Gowdy. That's right. That's why I'm loading up on SoFi and trying to get my 6,000 shares under 9 average. Next stop, 10,000 shares. JR, I take 50% any day, Nazareth. Any day they want to give me 50% return. Why not? We're up 35 on the Dow right now. 19 on S&P, 148 on NASDAQ, oil up 156. That's the deal right now. Let's see what else is going on here. We have treasury yields rising to new highs. Apparently, we've got the U.S. 10-year now at 3.76 to 3.78. Germany at 2.08. Italy 4.5%. UK 4.15%. Yucks. Yuck. Euro 96.6. The pound 108.3. Both down again. The yen is back to 144. It was as good as 141. That was strengthening against US dollar. Now it's back to 144. Falling apart. There's no strength in the yen. All right. The Dow now up 14. Not going anywhere. Apple's up $3. So you can write 156s, 157s, 158s. The higher it wants to go, fine. We'll write higher price calls. Easy peasy every time. Oh, you got to love this. Thank you, everybody, for being here today. We've got GameStop at 25.81.83, up 79 cents. Hardly a recovery rally. I mean, it's a slight bit better, but, not much. Alex is saying, I've also focused on buying SoFi before November. I listened to an interview back in the spring with the COO who said the bank charter effect won't show fully until the third quarter. Then it's going to show. I believe it. I believe we're coming up to that. Definitely. Cheers, Alex, to you and everyone in the UK. Cheers to everyone in the in the EU and Europe, around the world. Those of you who are watching me from Asia, Australia, New Zealand, those of you watching in the Caribbean, South America, those watching from Africa, Canada, the USA. Cheers, everyone, to all of you from us here. Oh, yeah, the brown fuzzy water. Thank you all so much for being around with us. I love it. Let's see what happens with this market. I say looks like a dead cat bounce in a bear market, but that gives you opportunities to write options for higher premiums, and that's what we love to do. GameStop up 72. SoFi's up 18 to 549. We got Rocket Lab up 17 to 429. HPQ holding a 2-cent gain, 25.37. Over on ME up 13. Matterport up 24. ATIP up a nickel. SmartRent up 9. Spire up 11 cents. Xterra up a dime. Bed Bath Beyond up 40 cents. Tesla up 7.94. A little pop finally on Tesla. 2.83. Don't like the upside here all that much, but it's a little bump at the moment. It's trying. We'll see. Trading at 105 times earnings. We're not going anywhere on Tesla. We'll see how it plays out. Just showing right now 279 on Tesla. Watching it jump about here. It does do that, doesn't it? All right, let's see what else is up. The market right now down 64. Now I'm up 6. I don't know what to believe. This market is just all over the map right now. It is nuts. What else is going on? Let's go. Alex, cheers, Bruce. Neat. Bama Babe. Okay, all my covered calls have been written and sold. All my stink bids are in. Time to cross my arms and enjoy my coffee. That's right. Wait for depreciation to buy them back. Sell my house fast in Upper Marlboro. European markets are closing. Are we rocketing? Brian, October 14 strike, $26 contract, I think, on GameStop. Bid 205, ask 219. I think I'm taking this one. Interesting. Uncle Bruce, what would the stink bid ask be? What do you think? 218, 217. Not 214, under the 220 mark, but not under the 215 yet. That's what I'd be looking at. See if you get it. Stock's up a little bit more. Maybe you'll get taken out at 214 at 218, 217. Maybe they'll come and get you. Be patient, my friend. Take as much as you can get. Stock pops a little more. If it wants to go to 25.90, then you offer at 229, 234, 238. You move it up. Don't come down. You get more expensive. It all depends on what the stock wants to do. We'll have to just, patiently watch and wait and see what happens. Okay. Anyway, there you go. Don't play this market with an 8-second attention span. You will get crushed. You cannot have an 8-second attention span at all, everybody. Okay? Rock and roll, kids. Let's see what's going on. I got the Dow at the moment. Looks like we're off a little bit again, negative at the moment. Maybe +7 now. We're kind of hanging around here. GameStop looks like 25.70 or so, I think is what we got. Interesting stuff. We'll see how this market works as the day goes on. Okay, everybody? Thumbs ups today. 231 have come in. You guys are awesome. Thank you so much. I can only say with this kind of thumbs up action, I can only put up these emojis and give you folks, hopefully these emojis will give the stock the inspiration, the markets, to do what they're supposed to do for you. Stocks you want going up, stocks you want staying flat, stocks you want going down. Neat. The knee attack is on from your buddy Bruce here. We're attacking with the knee emojis. Looks like Nazareth has kicked in here. The knee emojis on his side. Richard Garland has joined us with the knee emoji attack. Knee. Let's get these knees in the house. There we go. The knee emojis are hitting the chat board here. Get a Moon Man Moo. There they come. Mirko, Spicy Android, Nazareth. Thank you, guys. Alex is here with the neat emojis. Kareem, you got to love this. Nick, I'm already 10 grand up on my shorts, so we'll cover soon. Right on, Nick, making money. We've got Moon Man Moo, some more neat emojis coming in. You can't stop the neat emojis. Once they hit, they take over. DQ got one in there. Sell my house fast, Upper Marlboro. Here they come. Neat. We are the Knights of Neat, and we say neat. That's right, Constantine. You never mess with the Knights of the Neat. Pappy J, thank you for the neat emojis. 232 thumbs ups, and the neat emojis are out at the same time. You got to love that. The power of the neat emojis are everywhere. We're down 29 on the Dow. We're only up 12 on S&P. We're up 118 on NASDAQ at the moment. Larry Titus, neat emojis have been registered. Thank you, my friend. Thank you, everybody, for being here today. It's great to see you. Thanks for these 233 and counting thumbs ups. Keep them coming in for me. Appreciate that. Join me this afternoon at 3 o'clock Eastern for the closing hour of this market today. We'll watch that together. I'm also on the air on Traveling with Bruce, my other channel, 7 and 8 o'clock today. 7 for members, 8 o'clock for visitors. Join me if you like. That's the dealio today. That is where we're at right now. Oil up 108 to 79.82. GameStop at 25.65 after topping out. It looks like 25.87. We've given up about 25 cents from the high about 15 minutes ago. That's the dealio as I see it here. 15-point down dip on the Dow. The volume on GameStop, by the way, of 963,000. That's not even 250,000 pre-split. This is dead quiet. Dude, face, thank you for the knee emojis. Karen, I just sold 2 covered calls on AMD, October 21, 70 strike for $291 each. Giddy up. DQ, neat from a plane. Right on, DQ from an airplane. Neat from an airplane. The Knights of Neat are overhead. Watch out. You got to love this. John Anderson, thanks, everybody. John, thank you. Always a pleasure to have you here. Making money in this market, kids. There you go, guys. Take your spots, take your positioning, start writing, and start scoring returns. Well done, everybody. We're down 26 on the Dow, up 13 on S&P, up 118 on NASDAQ. It's a mixed bag at the moment. We'll see how this all plays out. Join me today at 3 Eastern for the final hour today as we run through. Thank you for the new Gold Bagel member joiners, uppers today. Welcome aboard. Thank you for all of you the donations today through PayPal and through Super Chats. You guys are, as always, you're the best. I thank you so very much. Nazareth, keep it going, Nazareth. Make money, baby. I love it. Mirko, have a nice breakfast, Uncle B. Will do, folks. We're going for a bite, and we'll see you guys at 3 this afternoon, and we'll keep an eye on this market, okay? Thanks, guys. Talk to you soon. Bye from Calgary.